Okay, folks, welcome to another Sunday night Futures Live. Hope everybody had an awesome weekend. I'm looking forward to a new trading week. The futures markets are now open, and we'll kick it off with, frankly, I wanted to take a look at the US dollar. Let me share my screen here before I forget to do so. I hope everyone had an awesome Christmas and hope everybody's getting ready for an outstanding new year. I'm looking forward to it. And let's do it. Okay. So you should be seeing my screen. I am sharing a chart of the US dollar. And the dollar, let's go to a 4-hour chart first. And you can see that I drew these upper band of resistance, lower band of support quite a while ago now. Kind of looks like an Italian flag with the white in the middle. And we had blew through the upper band of resistance on multiple occasions now. And last week, we broke down on the dollar. So it's going to be interesting to see whether or not we get a continuation move lower here. The Japanese yen, for its part, did not close well last week. The euro closed, down, but off the lows of the week. So it's really critical for a number of the sectors out there, whether it be emerging markets, whether it be uh, uh, exporters such as the Dow Jones Industrial Average, manufacturing names. It's critical that they have a weaker U.S. dollar so that they can export more. A rising U.S. dollar makes our goods more expensive overseas. So I think that would be good for the U.S. economy. And while we're on the topic of currencies, let's take a quick peek at the euro and yen. I can't put my glasses on because, well, I can, I guess. My glasses are all bent. I have 2 new pairs on order. This one here, I woke up, I slept on them the other night. I broke the arm off of it. Let's take a look at the euro. Euro is down at current. And on the week last week, this includes this week's, but we did not put in a new weekly closing lower, excuse me, a new lower low intra-week. So we may be setting up for a W formation here on the euro. Jury's out. As for the Japanese yen, not looking good. Not looking good at all. We had broken out a number of weeks ago, and we're just pulling back and doing retest, lower lows, lower lows, lower lows, bearish stuff. So that is a bit of a problem for the euro. They can't find a buyer. The yen carry trade is doing well. That's allowing the stock market to move up higher despite Friday's price action. Now, going back to a shorter duration time frame, let's go to a 5-minute chart. Let's switch on over to equities. Let's begin with the E-minis. And the E-minis are opening up at current. Not a lot of action here. NASDAQ moving up 0.18% at the session highs at current, looking somewhat bullish. Sticking with equities, small caps up 0.12%, just off of session highs. Let's throw up an alert here. Let's set one up down here too. I want to keep a very tight pulse on this market moving forward into the new year. Looking at the Dow Jones Industrial Average up fractionally. They tried to take us down at the open. We have an outside reversal bar. So it appears as though they may want to push us up. Now, I'm not seeing any comments. That tells me that Restream is not working. Bear with me one second, folks. Let me head on over to the feed off of YouTube. Live. Yep. Lots of comments. Hey, Jody. Pat, welcome. Mr. Tim, welcome. Corey, welcome. Danny, hello, sir. George, welcome. Pat, RGTI, that's that quantum computing trade. We spoke about that about 2 weeks ago. Yes, very, very hot sector, Pat. I like it. Polish Taco, Happy New Year to you, sir. Hey, Sean, welcome. Okay. So we have 19 folks and building. If I can get 19 likes, I would appreciate it. Thank you very much. Helps us out with the YouTube algorithms. Dow Jones just went red, but thin trade here, folks. Let's face it. This is going to be another light volume week. Perhaps on Thursday, Friday, we'll see some volume pickup. Homer Rocks, welcome. Good day to you, my friend. All right, so we did currencies, we did equities, we didn't do the mid caps. Let's take a peek. Mid caps are up fractionally. Not much happening here at all. I think the NQ is where the action is this evening, and it's basing at best. Let's set up an alert. Let's see whether or not we take out highs. And another one, do we take out lows? Pretty simple stuff. Again, I want to keep a pulse on this market this week because I'm frankly, I'm not bullish. I haven't been bullish for a couple of weeks now. And with each passing day, I grow a little bit more skeptical about the markets. Bitcoin, that's down another 1.69%. This is the poster child for speculative trading, high risk trading, and the risk is coming out of Bitcoin. It's highly correlated with the U.S. equity markets. I think that it's the equity markets that shake the crypto markets, not vice versa. Yet, as of right now, anyway, that could change in the future. But clearly, we have money coming out of at least Bitcoin. I don't know about the other cryptocurrencies, but Bitcoin under pressure here this weekend. Now, one area that I am growing more and more bullish on with each passing day is energy. Now, oil, I love the daily chart. The opening price action here, not loving it. There's nothing to love here per se. But I think that this is an opportunity. We have a nice tight consolidation on the chart of oil. We'll go to that in a moment. I think it's, in fact, a Bollinger Band squeeze. And you can see it here, as a matter of fact, a little bit of a microcosm of what we're seeing on a daily chart. So here's the /CL. That's light sweet crude. Take note of the Bollinger Band squeeze. You have Bollinger Bands in orange trading within the Keltner channels. I think that this is going to fire up north, even though we had a bearish open today. They tried to take it up. Sellers moved in and they took it down. That's okay. We're only talking about a 5-minute chart. So crude oil down at the open here, about a half percentage point. Taking a look at NG, natural gas, of which we are. Wow. I knew this was going to open up. I didn't know it was going to open up this big. So natural gas is gapping up about 8%. We're long of a leverage product called BOIL, BOIL, the symbol. If you don't want that type of volatility, yet you want exposure to natural gas, you look at UNG. But natural gas here at the open is just looking phenomenal. Here's a 1 hour view. We're probably going to pull back here some overnight and consolidate, but natural gas is just looking so strong, so strong. Very bullish. Look at that gap up, 4 hour chart. They gapped it up and closed it. Oh, no, they haven't closed it yet. Or it's sitting on top of its 21 period EMA in dashed orange. Tell me that wasn't planned. Let's go back, 5 minute view. Let's stick with the commodity space for a moment. Let's take a look at gold. Gold moving up at the open here by 0.20%. We did our first buying since October, actually before then, since probably the summer of gold stocks last week. Not aggressive, very small, but it's about that time where we start thinking about rebuilding the position that we booked profits on back in October of this year. So gold looking interesting at the open. Let's take a look at silver. Silver moving up here as well, 0.21%. A little bit of resistance above. Let's take a peek at corn. We have a position here on corn. I'm looking for a pullback. We opened up what you call NQ, just broke down to new lower lows. Let's come back to corn. Let's see what the volume looks like on NQ. Very light. Not a lot behind the selling. RUT just broke down to new session lower lows. That's the Russell 2000. NQ just hit session lower lows. But again, not a ton of volume here. This is the Russell 2000, now negative. Let's see what the ES is doing. ES pulling back. It's just taking out session lows. YM. YM now negative, down 0.08%. Okay. All right, let's head back on over. Let's talk about agriculture. Agriculture prices have been moving up. That is inflationary. Now, I sold an iron condor. Basically, we are the casino, not the gambler. We sold premium, looking to generate some cash flow. And our deltas are a little bit skewed right now, meaning we have 24 deltas to the call side. And what do we have to the put side? 15 deltas to the put side. So not egregious. I'm looking for a pullback here on corn, at least for a couple of days. We have about 55 days until expiration on those contracts. So nothing to do but watch and watch for some time decay on the options. Futures don't have time decay. The options on futures have time decay. Let's take a look at wheat. Wheat looking really, really good here. Let's take a quick peek at the weekly charts. Wheat was not looking good last week, this time last week, but it did not put in new weekly lower lows last week and flash an inside week. I think that we could break out as soon as this week. So this is an area where I'm looking to put on more risk in terms of selling premium. Wheat looks interesting due to the fact that it's consolidating, it's trading sideways, it's doing a lot of nothing right now. It's stopped going down. So you can look to put on an iron condor, strangle. You just want to use very wide strangles if you're going to put on a strangle, because that's an undefined risk trade and it eats up a lot of your buying power. Let's take a look at soybeans. Soybeans setting up nicely here as well. Take note of the higher lows on stochastics. And there might be a few of you out there saying, we really don't care about soybeans or we don't care about commodities per se. The reason why I trade commodities is because what we're trying to do in this environment, because I began the conversation off tonight saying, I am not bullish on the equity market. We're going to talk about the whys behind that this evening. We're going to reinforce why I am not bullish, why I am very concerned about the equity markets. So, but we need to be in the game to generate cash flow. But the key is to identify uncorrelated assets to the S&P 500 or to the U.S. equity market in general. So what are generally uncorrelated to the U.S. equity markets? Commodities. So that's why we have a trade on natural gas, long. Equity markets took it on the chin on Friday. Guess what natural gas did? Moved up. Futures are down at current. What's natural gas doing? Moving up. Same thing holds true for wheat, soybeans, corn. They're not doing a lot of anything right now. They're not reacting to the U.S. stock market. Therefore, I don't have to worry about stocks dropping and corn dropping along with them. People got to eat. The law of supply and demand. That's the beauty of agriculture. So we'll continue to do this. And to me, I wouldn't have traded soybeans or corn last week out of fear that we would put in new lower lows. Now that we're stabilizing, I could see us putting on an iron condor, a very, very risk adverse trade, just looking to generate cash flow to see what direction this market is going to take and what direction this economy is going to take in 2025. TF Hatter, welcome. Bitcoin showing some weakness at 92.30. Yeah, all I plan on doing with it is dollar cost averaging in. I do it every Monday, small amount every single week, and it's just worked. It's just worked for me, and we'll continue to do that. And they give us buying opportunities, we'll take those buying opportunities. So I'm thinking longer term. I'm thinking 5-10 years down the road for me to cash those chips in. So we'll stick with the strategy at current. Let me grab a sip of water here. I think we covered. I was listening to good old Bill Gates, everybody's favorite demon, being interviewed, and his opinion on how cow methane, cow gas, cow flatulence, if you will, makes up for 6% of all CO2 emissions. I tend to doubt that, but okay, Bill. LE, live cattle. Wow, Charles still looks good. Meat price is moving up higher. Ag price is stabilizing. Not good. Not good. Inflationary. Let's leave it off with copper. Copper weekly chart doing a lot of nothing here. Again, another area where you could sell premium on if there are options. I don't see options here for copper. I don't know the mini contract symbol, but natural gas, another area where you could sell premium. Fairly decent IV rank. You can generate some pretty decent premiums on natural gas, but you got to stay small. They call natural gas the widowmaker of commodities for a reason. It's just so very volatile. So be very, very careful with natural gas. Now, I think we did everything we needed to do with futures. Let's just check back really quick with NQ, see if we've stabilized. And we have. All right. So there's no reason to go staring at a screen. Okay, folks, I put up a request for folks to enter their symbols in the forum. If you don't have the link, I'll throw the link in the chat box. Franklin, Enick, welcome. Use that link, head on over. No credit card required. Enter your symbols. Guys, I'll go over these. Just if you could just try to get them underneath the that feed, so it's just one-stop shop. So I can take a look at it, so I don't miss anybody's. All right, so JBLU and Tesla. We have a position in Tesla. We did really well with Tesla on Friday. We have a short trade there. And don't forget, folks, our sponsor this evening is TrendSpider. Get a bare minimum of 35% discount code. Link below. Automated technical analysis, back testing, alerts, etc. There's just so much there. Take a tour. Head on over and sign up. Start 2025 off right with your own retail Bloomberg terminal. That is TrendSpider. Take advantage of it. Get that 35% discount code. Use the link below, and that's a bare minimum discount. Link below on YouTube, link above on Twitter. All right, so I want to begin with a bit of remorse. I think that Jimmy Carter was probably, he was not a good president. I was alive and saw what he was doing as president. He was, I don't want to speak ill of the dead, but he's passed away. God bless. I'm sure he's made his way up to heaven. He did great things in his life after he was president. As a president, he was not good. But relative to recent presidents, he's probably one of the most honest presidents that we've had in recent memory. So many blessings to his family, and may rest in peace. And also, if you're seeing these Quora rings, okay, I have a health savings account. If I don't use it, I lose it. Believe it or not, Quora, I don't even have a link to give you. Actually, I can give you a link. Here, I don't get anything for this. If you have a health savings account, you're about to lose money by not cashing it in. They're covered under the health savings plans, which I'm shocked about. I'm going over to Best Buy tomorrow. Oh, they won't let me share the link because it's got too many characters. All right. Head on over to Aura, not Quora, Aura. And I've been wanting to get one of these, but I can use it with my tax-free dollars now. So just a bit of FYI. See the value you get here? Value, I say. All right. So we're heading into a week that is going to be like last week, quiet. It's going to be very, very quiet. It's going to be volatile. Nobody saw Friday coming. It was a down day. It was a one-sided day. Folks, we have a new president coming in, and what's the analogy I like to use here to illustrate how excited everybody is to have him, the people meeting in Washington, to have him coming in yet again. You know that the Democrats hate the earth that he walks on, and most of the Republicans do too. And he's giving them all the more reason to hate him with some great trial balloons here being floated that Trump pushes for term limits would cap House members at 6 years or 3 terms, senators 12 years or 2 terms. Under these rules, think about this. Think about what he's walking into now. Under these rules, 73% of the 115th Congress would lose their seats, including 318 House reps, 161 Republicans, 157 Democrats, and 46 senators. This dramatic overhaul reflects drain the swamp agenda aiming to curtail long-standing political careers in Washington. So needed, so needed. Uh, we're we're going to be in for a battle here. I know everybody's looking for the cure. Uh, the disease, or I should say, the cure is going to be worse than the disease for a while. Getting this legislation passed through, they are going to be throwing logs down the hill trying to block him from doing stuff like this, and it's so needed. In addition, Massey and Marjorie Taylor Greene urge release of multi-million-dollar congressional sexual slush fund list. Absolutely. Absolutely. That's our tax money. They're using our tax money as a slush fund to quiet their misdeeds in Congress. I don't care if you're Republican, Democrat, Independent, whatever. Get out. You should be fired, thrown out of office, humiliated. But the only reason why I'm sharing this is that the obstacles that he's going to be encountering are going to be monumental. It's going to be great theater. It's going to be outstanding theater, but the gaslighting that is going to be coming out of the deep state, out of the intelligence community, is going to be immense. You're hearing about bird flu, this, and every day a new trial balloon for a new fear-mongering campaign to try to derail this president. So buckle up. I have little delusion that this is going to be a very, very rocky first quarter of 2025. It's going to be extremely rocky, extremely volatile. Anybody who says anything different, I think they're out of their minds, because you're taking on the establishment, and on both sides of the aisle, not just the Democratic side. There are no Democrats, Republicans. It's all uniparty nonsense. They got to go. So hopefully they get these term limits through. Hopefully they release this list of congressmen that we're bailing out using a sexual slush fund. It's just shocking, just shocking. All right, let's talk about economic data that's coming out this week. Tomorrow, the 30th, 2 trading days left to go in 2024. Monday, not much happening here. Chicago Business Barometer, or PMI, home sales. Tuesday, Case-Shiller. It's really nothing happening here. Thursday, initial jobless claims. That's a weekly number. Construction spending, that's pretty important. And Friday, we get the ISM manufacturing numbers. That number has been in contraction for a couple of years now. So nobody should be shocked that we get a number with a read down below 50. And that means that manufacturing remains in contraction. And I'm expecting some revisions to jobless claims after the 20th of January, after inauguration. I think the Bureau of Labor and Statistics is going to come out, and they are going to do a data dump, revising down a lot of bad data that we've been given to trade off of these past few years. So buckle up. Fed Watch Tool, probability of a Fed rate cut in January stands at only 10.7%. And as for March, we remain at a 50% probability of an ease. I have a little bit more to talk about this in a moment. I don't think that they may not cut rates, but I think the Federal Reserve is going to need to balloon up their balance sheet a lot sooner than what people had expected. And I think that Powell is going to get bullied into it. But first, before we go talking about that, let's talk about the valuations of the equity market. Last week was the second week where we attempted to close above the highs of 2021. We did not. We are now at the third highest level in history. They're probably going to try to pump it up yet again this coming week. So valuations extremely expensive as measured by the Shiller PE ratio, as measured by the Buffett indicator. Uh, we are beyond two standard deviations, beyond historical norms. This is 2000. For context, the stock market as a percentage of GDP is well beyond a standard deviation beyond where we were in 2000. That's how overvalued this equity market is. Here is historical trend. You are here. So if you're wondering why I am growing more and more bearish on this market, and more pulling in my horns, uh, owning bonds, owning uh, cash, selling premium to avoid a black swan event. These are the reasons why. We can ignore them. We can ignore them, but what's the sense? Each time, going back to 2000 or before that or after that, wouldn't have paid you to ignore them. Why would it pay to ignore them now? All right, so we're going to learn from history, and our goal is not to make a bundle to the short side. It's going to be nice. We'll make some money to the short side, but the goal is to be liquid when we retrace back down to or close to historical trend, and then we take all that capital that we've had on the sidelines or we had in bonds, which rallied, we had in natural gas, which rallied, and we take that, we cash in our shorts, and then we begin to get long when everybody else is afraid to buy stocks. And that's going to be the psychology. Right now, everybody's rah, rah, rah. Bull market 2025 is coming. It's going to be a great year. We have the Trump administration. We got new guys coming in. The good guys are coming in. And there's no fear. There should be. There should be. So I see great opportunities on the horizon. Unfortunately, I think the better opportunities right now are setting up in commodities and to the short side of the U.S. equity market. From Charles Bilello, large cap U.S. stocks are now trading at 28 times earnings versus, that's forward looking, versus 18 times for small caps, the widest valuation gap since 2000. Here's the rub. What's driving the S&P 500 up higher is about no more than 10 stocks. 53% of stocks out there are trading above their 200-day moving average. That's it. You have a very thin group of stocks that are dragging the S&P 500 higher, and at some point in time, they too shall buckle. Now, I view this as opportunity here. The ratio of emerging markets to U.S. equities is now at an all-time low, breaking below the prior low of March 1999. So here's the good part, is that we started off tonight's show looking at the U.S. dollar. The dollar looks like it may be the beginning stages of topping out. Couple of lessons learned from that is that, or things that you should do, book your tickets to Europe now with a stronger US dollar. I'm going to London and I'm going to Ireland. So I will be booking those tickets tonight or tomorrow, one of the two, with a stronger US dollar. Also, if the dollar pulls back, we know that there's an inverse relationship between emerging markets and the US dollar. When the dollar goes up, emerging markets go down. So when the dollar goes down, it's like a tax cut for emerging markets. One problem with that is this, is that if the US equity market rolls over, so shall, in all probability, emerging markets. But that is opportunity. Why? If the dollar goes down, US stocks go down, and emerging markets go down as well, emerging markets get a lot cheaper. And if structurally the US dollar goes from bull market to bear market, well, then the next bull market is going to be not in US stocks, it's going to be in emerging markets because the dollar is correcting. Europe is, for the most part, a basket case. And you're going to want to put your capital to work in emerging markets, which have already been beaten up. That is where I believe that we're going to see a lot of opportunity. We have a position already, not a big one, but it will get bigger when there's blood in the streets. Taking a look at the forecast of the so-called experts out there, at current 5,971, the S&P 500 is 500 points above the highest 2024 year-end price target on Wall Street and 23% above the average target of 4,861. So no matter what metric you look at, in anticipated year-end price targets, whether it be the Shiller PE ratio, the Warren Buffett indicator, or the Buffett indicator, price to sales, price to book, no matter what you look at, this market is priced for perfection, and we have earnings coming up. Staples, this is from JC Peretz. We've been talking about this as well. JC's point here, the S&P Staples Index, the XLP, which is what we usually look at, just closed the week at the lowest levels in history on a relative basis relative to the S&P 500. Is it usually a bad thing for equities when staples are underperforming, or are staples struggling to keep up historically, a sign of a healthy market environment? So I think what JC is missing here is that when the U.S. equity markets, remember back in August, you had the big surge up higher in the volatility index, and the S&P 500 went into a correction. What outperformed? Staples, because they're viewed as a safe haven. Now, I think what JC is alluding to here is that while staples may be correcting due to the fact that you have people that are believing that we are in a risk-on environment, they want to own semiconductor stocks, they don't want to own McDonald's. Okay, you can make that argument. I'm not in that camp. I think that the staples have seen their day. And I think that they are beginning to lead the way down, just as utilities have already begun to lead the way down as yields have moved up higher. Stocks are becoming more expensive. But there are opportunities out there. And we've already talked about opportunities in natural gas. We were buyers of more LNG stocks last week. In fact, on FLNG, I doubled my position last week. If I could type, there we go. Flex LNG, yielding 13.76%. We got a little bit better than that. We were buyers down here, and we doubled up, and it looks as though we are about to make a nice little rally here due to the fact that the news coming out of Ukraine is it. You know, I love Europe. Okay, I've been there. Great people. A lot of people make fun of the French as being rude. I didn't experience that. I thought they were very nice. Italy, Italians, great people. I traveled all over that country. It does not make me happy to see that the Ukrainians are shutting down natural gas pipelines coming out of Russia into Western Europe, the very continent that was good enough to help finance their war. So it looks as though the demand for U.S. LNG, Flex LNG, is only going to go up higher because the Ukrainians have just stuck it in the back of the rest of Western Europe. Also, European gas prices soar as Putin says a new Ukraine transit deal is unlikely. So at current, there doesn't appear to be a deal on the horizon. So the Ukrainians have stuck it to, in particular, the Germans. So bravo to the leftists in Brussels for financing a ridiculous war that never should have happened. And here is the chart of natural gas on a monthly basis. And the path of least resistance appears to be changing from what was a bear market to a consolidation. You had a flush out, and now it appears as though they're getting ready to take natural gas up a lot higher. And have no doubt, President Trump is going to be pushing U.S. LNG like a drug dealer. He's going to be pushing it. Good for us. Now, reasons why we're a bit concerned about this market. Yields, folks. I mean, the Federal Reserve has cut 100 basis points. That began back here. What has the 10-year yield done since the beginning of that rate cut? It's only gone up. And we closed at highs last week, not seen since last March. So this is not what the equity markets had planned for. They had planned for yields to decline, a freezing up or a freeing up of the housing market, stimulation of the U.S. economy. It ain't happening. The exact opposite is happening. And in fact, when you take a look at the yield curve, we spoke about this on Thursday night, and this only got worse. We are well within the red zone of the yield curve, monthly chart yield curve, and you could see where these blue lines intersect. That is where the equity markets or the S&P 500 has buckled in the past, and every single time it has buckled, it has been inside this red zone. What has done well during those time frames? What did we just talk about? Natural gas in black. This is what we want to own. Uncorrelated assets to the S&P 500. Let the S&P 500 correct. We've done our due diligence. We know what works in this environment. So if you're not currently a member, sign up. 14-day free trial offer. In fact, you get TrendSpider for free. Link below. We just had an alert fire off. That's crude oil. Crude oil is reversing. It looks like crude oil is going to head up. Okay. And in fact, here's a chart of oil on a daily time frame. We spoke about the Bollinger Band squeeze setting up on a 5-minute chart earlier. Now we have on a daily chart Bollinger Bands in black, trading inside the Keltner channels in gray. This is setting up for a rip your face off rally. So we began buying energy stocks a couple of weeks ago. We sold some premium on XLE. I think it's time that we revisit and begin to become a bit more aggressive, if not buy crude oil. Here's the XLE. As a matter of fact, it wasn't XLE that we bought. We sold a premium there on using an iron condor. We bought Gush, which is a leverage product, putting you long of the energy stocks. Now, this daily chart of energy, we had a reversal day on Friday. We may get a pullback here. Look for the higher low. I think that pullback on the XLE, you can nibble on energy stocks, then look for a breakout above Friday's high. That continuation breakout is probably going to mark the beginning of a rip your face off rally in the energy stocks. This is out of China. Chinese 2-year yield is about to go under 1%. They're heading towards zero interest rate policy in China. It's the Japanese effect. They're going to do it over in China. They're going to be exporting deflation. That's the only hope that we have here right now. And frankly, the Federal Reserve is scared out of their minds that we see deflation here in the United States. But frankly, I think that this is actually a good thing, despite what the Federal Reserve has to say. Lastly, I think that the ultimate game plan for this market is that while not immediate, the Federal Reserve is not going to be cutting rates anytime soon, because rates, every time they cut rates, yields go up on the long end of the curve. What I think they're going to be doing to get that 10-year, 20-year, and 30-year paper under control is they're going to begin ballooning up their balance sheet yet again to remind you where we've been. This is how much they've rolled off their balance sheet. And over the past several weeks, we haven't seen a sideways consolidation like this in quite a while. My guess is we're basing, and they are about to rebuild their balance sheet. And I think it's going to be at the behest of President Trump. Let's do some chart requests, and we will call it a night. All right, so we have Tesla for Dane. JBLU. JBLU, didn't they get bought out? JD. TLT. TLT, my worst performing position. Bonnie Bean, NFE. Did I miss anybody? No, we're good. Okay, let's do it. Folks, again, we're going to be using TrendSpider, automated technical analysis. Get a bare minimum 35% discount code below on YouTube, above on Twitter. Start the new year off right. Okay, let's begin with Tesla. For disclosure, we have a short position on Tesla using a call spread. Now we have seasonality, up 60% of the time in December, 57% of the time in January. The first couple of weeks of January are not favorable to Tesla. Forget about this bar here, the 53rd week. I think that's a leap year thing. Just focus on this bar here. The final week, we're up 53% of the times. And last week, up only 40% of the times. That turned out to be accurate. So the price action last week was no bueno. We have a potential double top here. Now, I think that we're going to rally the first couple of days of this week. They're going to try to recapture the support level. I think ultimately it's going to fail. $15-minute chart. Yeah, I think they're going to rally it. Let's go to a 30-minute. Yeah, they're going to rally this. Possibly up to as high as 451. And we have a call spread of which we are short. And I really don't care what it does, to be honest with you. The time decay is rapidly picking up right now. And we'll be closing out that trade in the next couple of days. So macro view, taking a look at the weekly chart, folks. Not a great week last week, and nor was the prior week. Lots of topping action. And this is indicative of a top. And this is a third standard deviation Bollinger Band. We're pretty extended. Let's amend this. I think we're going to get a rally. I think we fade and we move lower on Tesla. So short-term pop, I think that pop gets faded on Tesla. JBLU. Could have sworn they got bought out. Okay, so without trend lines, automated trend lines. We have overhead supply immediately above. We got stopped there last week. That being said, we broke through a set of resistance levels as well. I'm not a buyer here, not until we close above $8 a share. Daily view. Nice little rally here already. They could push us up to 822. I think they're going to fade into that resistance level. So I would be careful. You do have overhead supply above. All right. So what I just did is I overlaid on the daily chart weekly resistance levels as well. And you can see we have 2 weekly resistance levels on this daily chart. I'm not a buyer here. I think that if they spike it up, you're going to get sellers moving in and they're going to take it down lower. I would wait for a pullback and a retest of it around 722 per share. JD. All right. So it had a nice little rally and it rallied right up and into resistance. No great shock. Let's overlay some trend lines. 33 bucks a share may be an interesting support level to hold. If that fails, it's coming down to around 30 bucks a share on JD. So it looks as though we are going to press lower. They tried to rally for the past couple of weeks, and those rallies have faded. Let's bring the Stokes up here to appreciate where. Yeah, we have both lines on Stokes trading down below 50s. Rallies tend to fade, and that's exactly what you're seeing. Stokes are trading down below 50. Rallies tend to fade. It's a momentum indicator, and it's speaking volumes to you right now. It wants to go lower. It's going down bare minimum 33 bucks a share, if not down to 30 bucks a share. I would avoid this right now. TLT. Now I own TLT, and it's a bond fund. It's my worst performing position. Uh, we bounced off of support last week. I think that I mentioned earlier that I believe that the Federal Reserve is going to get forced by the Trump administration to start buying back treasuries. They did it during his first administration. He forced or he bullied Powell back in 2018 to cut interest rates. It is not beyond President Trump to bully Powell into doing what he wants. He's done it before. He will do it again. He knows he needs cheaper yields because our debt is completely out of control. Interest payments are just flying out the door. Our interest payments alone eclipse our budget deficit, excuse me, our defense spending. So I cannot imagine him not forcing the Federal Reserve to take aggressive action to bring down longer term yields. So, in response to the question, what do I think about TLT? I think that short term, it's a train wreck. Am I going to sell here? No. Why? Well, if President Trump comes in and he does what I suspect he's going to do, he's going to bully Powell to begin buying longer term debt. Guess what that does to the longer term debt? Traders are going to front run that trade. They're going to front run the Federal Reserve, and they're going to start buying it. Also, you're going to have governments out there, China in particular, that are going to want to avoid sanctions. They're going to want to be in the good graces of the Trump administration. Everybody's making the assumption that the day he gets into office, it's going to be tariffs on everybody. I think people are not playing fourth degree chess here. He's saying what he wants to do. That doesn't mean he's going to do what he says he's going to do. If he's going to cut a deal, if you have China buying our debt, the last thing he's going to want to do is slap tariffs on them. He wants them to buy our debt, buy our IOUs. That way our interest rates come down without the Federal Reserve having to be as aggressive with buying back our debt. So short term, looking at this chart, am I bullish? No stretch of the imagination. But when I look at this chart, do I see blood in the streets? You're darn right I do. So yeah, do I think it's an opportunity now to begin buying bonds? Probably so. I think the most damage has already been done. Could it head lower? Absolutely, no doubt about it. But we are at a support level. Stokes is still moving lower. I'm not calling a bottom here. I just think that it's safe to begin a dollar cost averaging strategy into longer duration bonds. It is a foregone conclusion that for President Trump to be successful, long-term debt yields have to come down, or else forget about it. He knows it. We know it. Therefore, might as well front run that trade now. So I'm not selling my position. Am I going to buy more? Probably not until I see a weekly bullish key reversal bar. We don't have that yet. The best that we have is a cluster of daily candlesticks, not enough for me to go buying more. We have a descending wedge formation, which we broke out of, and now we're doing a retest. Maybe that's the bottom. I don't know. I'm not that smart. So the best way to approach this trade, dollar cost average in, I think that we're far closer to the bottom than we are to the top. So I'm neutral on bonds. And we also know this, is that when the yield curve finally breaks the back of the U.S. stock market, again, when these blue lines indicate where the stock market broke relative to, or the S&P 500 broke relative to the steepening yield curve. What did well? Gold, TLT. Here's TLT in brown. Each and every time, bonds. You wanted to buy bonds. So what do I own? We know that we have a steepening yield curve. So to take advantage of that trade, what do you want to own? TLT right here. Remember, the stock market buckled where this blue line intersects with the yield curve. What did bonds do immediately thereafter? They rallied. Natural gas rallied. Gold rallied. Each and every time. We own them all. That's the strategy. Next chart up, NFE. Energy stock. So you were in a long-term downtrend. You hit support. Again, the value of the automated trend lines, folks. Here. If you never saw the stock before, it saves you so much time. Click. Now you know why it bounced. You have a lot of support below. And now what we're doing is, as a matter of fact, let's do this. Let's go to a monthly chart. All right, so this is the Fibonacci retracement. And this is done automatically for you. So we bounced off of support. I think we're coming up here to around 1922 on NFE. Then you got to look for a pullback and a higher low. That's one thing that's missing here is a higher low. You're not seeing it on stochastics. you're going to have a bit of resistance right up here at 1528 as well. But the chart's looking good. I would like to have seen a more defined higher low here. But it's clearly under accumulation as measured by volume. And volume, frankly, for an abbreviated holiday week, volume was pretty good last week. It's under accumulation. Daily chart. I just can't buy it. You got resistance immediately above. So I'm bullish on the stock. To initiate a new trade here, I wouldn't do it. If they, I'm not sure if this is optionable. I would entertain selling covered calls, or if I wanted to put on a long position and I didn't want to buy the common stock because we're trading at a resistance level, I would entertain selling puts, which is a bullish bet. When you're selling them, selling puts is bullish, buying puts is bearish. So that's my take. George, you're very, very welcome. What about the Bank of England crash? I haven't heard about it. Corey, POWW? What's POWW? Ammo. Good setup. Higher low on Stokes. No higher low on price. You close above $1.25. You're coming up here to $1.50 in pretty much of a heartbeat. So looks bullish. I'm not a big penny stock guy, but best of luck with the trade. And everyone, thanks for being here. Much appreciated. Have a profitable trading week and an awesome new year. Don't forget TrendSpider. I give it away free to our silver and gold level members. Not ready yet? That's fine. Take advantage of the discount. Start 2025 off the right way. Everybody have an awesome night. Thank you for being here. Be well. Thank you, Sean. Sounds good, brother. See you tomorrow.